Moving on to the stock of the day, the stock that we have chosen today is Blue Jet. The stock is tanked, and how? And this is because of its Q1 numbers, which has not met the expectation of the street. And we have Varsha joining us with more details to tell us about what went wrong here. Varsha, what are you picking up?
Thank you for that. So yes, a stock whose net profit has doubled, revenue has doubled, and margins came out to 34% versus 27%. Still, the stock is down 10% because it did not meet analyst and investors' expectations. Let's see the key highlights, and then we'll compare what were the analyst expectations and what actual the results came out. So they missed analyst expectations. Even quarter on quarter also there was a degrowth in EBITDA margins and also in net profit. Now we shouldn't see quarter on quarter growth, but just to give a sense to you. If you see, the quarter on quarter degrowth was led by shift in the product mix, which resulted in lower overhead absorption during Q1 FY26. But let's just figure out why stock is down 10%. Let's see what analysts were expecting and what the actual results came out. So if you see, revenue came out to be 355 crore, but so this stock is not being tracked by many analysts. So I'm taking MOSL preview, which came out to be 374 crore according to MOSL. They were expecting 374 crore, number came out 355 crore. That's fine. That's actually fine. But if you see the EBITDA margin came out to at 34% versus 41% expectation. There's a huge downtick when it comes to EBITDA margin. Even net profit, if you see, came out to 91 crore versus expectations were 120 crore. So the expectations were set very high, considering the contrast media segment that the company has and also sweetener segment that the company has, but the actual results came out to be very poor relatively to the expectations, and that's the reason why if you see the Blue Jet is down almost 10%. And also the other reason which I find is the valuation. So if you see a valuation for the company is after the 10% downturn, the company is trading at 51 PE. Now the point here is, if already a company is trading at a very high valuation, if investors are giving a premium valuation to the company, even slight miss on the numbers, an investor will tank that stock out, and this is we are seeing in the Blue Jet. The stock is down almost 10%. And if you see, the median PE for the Blue Jet has always been in the range of 48 to 49. So it's also trading above its median PE after stock crashing 10%. And lastly, if I were to talk about the R&D and pipeline for the company, they're expecting 20 new CDMO opportunities in the next few years, and the planned capex. Now this is according to Q4 FY25 presentation that the company had. They are expecting a planned capex of around 300 crores in FY26, and Dahej will address their long-term growth when it comes to Blue Jet. So overall, a company is not meeting expectations is the main reason why you're seeing 10% downtick in Blue Jet Healthcare.